Welcome to our Friday Market Insights. My name is Jill Bester, and I am an Associate Portfolio Manager with Genis. Today, I am joined by Mike Thiessen, who is partner and our Director of Sustainable Investments. Good morning, Mike.
Morning, Jill.
Terrific. Why don't we start with what happened in the market this week, Mike?
Sure. Yeah. So this week was overall positive for the markets. S&P 500 is up about 1% on the week. The TSX is up almost 2% on the week, continuing to enjoy the commodity boom that's happening. Bigger news events this week. Tuesday, Janet Yellen, the Treasury Secretary, came out saying that rates could increase with increased government spending and then the economic recovery. So that actually sent the market down for Tuesday with the expectation of possibly higher rates. And then yesterday and today, the market jumped up. So yesterday, it was based mainly on more of a cyclical type rally. Today, the jump was based on worse job numbers, which is actually making investors suspect that it's going to be less likely that the Fed will increase rates. Which boosted the market, especially a lot of technology companies that really need lower rates to maintain the valuations that they're at right now. So overall, a positive week and hitting all-time highs for the S&P 500.
Yeah, it was interesting. Janet Yellen kind of retraced her steps on Wednesday, which brought the markets back, which we saw. What do the job numbers tell us about the recovery, both in Canada and the US? We did have those job numbers earlier released today. Can you just share with us?
Yeah, so the job numbers today weren't very positive. They were the unemployment in Canada went up, and that's partially due to lockdowns in many areas of Canada being reintroduced, including here in BC. And then the U.S. non-farm payrolls weren't as positive as expected. But both of these, it's more of a blip in the long-term trend. So the trend is getting more and more positive all the time, and then we're seeing this one negative reading. So I think that we need to focus on the overall trend. And the overall trend is that unemployment is going down, and this is positive for the overall economy. And we're seeing more spending. We're seeing a greater recovery, especially in the US. And I think as we have more vaccinations here in Canada, that will continue for us as well.
Right. It's been an exciting week in the news here in BC. Kids 12 years and older are going to potentially be getting that vaccine in their arm, which will, for us parents, is going to put our mind at ease. We have also seen an all-time, well, not an all-time high, the Canadian dollar bounce back up. How long do you think the commodity boom can last? That is obviously driving the Canadian dollar.
Yeah, so the commodity boom is very positive for Canada, being a resource-based economy. And I think that in the short run, we're definitely going to see this commodity boom continue, just with economies bouncing back. You know, the US really bouncing back in the last little while, and it's going to continue. China producing goods at all-time high levels, and so both of these major economies are really needing these raw materials that we have. So in the short term, we'll certainly see the commodity boom continue, and I don't suspect that we'll see this sustained as well, because if you look at plans in the U.S. economic plan, a lot of it is focused around infrastructure, which will need a lot of raw materials. A lot of it is around switch to a lower carbon economy, which will also require a lot of raw materials. And you're seeing commitments to move to a low carbon economy all around the world, which is going to mean that all of these countries are going to need to change a lot of their energy infrastructure, which is going to require a lot of materials as well. So I think this is going to be a sustained boom. Whether it's going to be a big super cycle or something like that, it's hard to really determine. Usually that requires a big structural change, but I think this will be something that will be more sustainable.
Yeah, it's amazing if you walk into Home Depot to get a 2x4 nowadays. Talking about our models and scoring, I had a client pose another question to me this week. It was in regards to our ESG ratings and how we score those. We were having a discussion around the different pharma companies Pfizer and Moderna's vaccines are running around $30 for the 2 shots, and their for-profit model, where AstraZeneca and J&J have made the commitment not to earn profits. So we started talking about how we would rate those pharmaceutical companies based on their models. Can you speak to that?
Sure. Yeah. So when we're talking about overall ESG scores, there's a separation between kind of the, I guess, operational ESG scores and then the product impact kind of scores. And in terms of operations, I think both of those models aren't really going to have effect on the operational scores. So those are the ESG scores that you could see on your quarterly reports. But then impact scores, or the net impact that you also see on quarterly reports, that's more affected by the positive impact that products are making that are being sold by companies in your portfolio. So for all of these companies that are making vaccines, their overall impact scores are going to be going up or have already gone up, depending on the results, the results and what the data providers have been calculating so far. But in terms of their models, whether it's for profit or nonprofit, it's not going to affect their overall impact scores. The only way that their business model could affect that impact score is if data providers are thinking that one company is price gouging. So if there is some sort of price gouging, or it's at rates that are unaffordable for people to buy the vaccine, then that would affect their overall impact, and it would likely be discounted.
How often do those considerations get reviewed in regards to the scoring?
Yeah. So they're reviewed quite often. So one of the great things about of having this data from data providers is there are hundreds and probably thousands of analysts that are working basically for us, providing these ESG scores, and they have artificial intelligence in many cases. They have various systems technology systems that they have in order to build these scores. So they're updating them quite often. Whenever new data is coming out from the company, possibly from a sustainability report or from a quarterly financial report, then that data is quickly being put into their overall ESG score as well.
Right. Well, terrific. I think we will wrap this up for this week, Mike. I thank you for your time. I'd also like to thank all of our clients and prospective clients for joining us. If you have any questions, please reach out to your portfolio manager. Enjoy your weekend, Mike.
Great. You too. Thanks.